Hey everyone, I'm so excited about today's episode, but first want to let you know that this show is made possible by FortuneBuilders. I also want to take a minute to invite you guys to an amazing opportunity to learn from some of the top experts in the real estate industry about how to get started in real estate or scale an existing business to the next level. FortuneBuilders is hosting a one-day webinar to help you learn about real estate investing in today's market. So throughout the show, if you feel like you're ready to get started, go to FortuneBuildersShow.com to register. Again, that's FortuneBuildersShow.com to register. If you're watching on YouTube or Facebook, you'll find a link right below the show so you can get there that way as well. And please remember that the content of this show and every show is for educational purposes only. Myself or our guests are not going to be providing any legal, financial, or professional advice. If we share specific results, they are attributed to an individual or a business, and we can't guarantee the results will happen for you, those earnings or the income will match those figures. The bottom line is there's always risk when investing in real estate. You can make a lot of money or you can lose a lot of money, and it's hard work. But that doesn't mean we can't have fun doing it. So let's get into today's episode.
From a team that has $1 billion in real estate investment experience. A show to help you learn the strategies and systems it takes to get started investing in real estate. This is the FortuneBuilders Real Estate Investing Show.
Hi everyone, it's your old pal JD Asajan here on the FortuneBuilders Real Estate Investing Show. So excited to be here today. We've got a great guest, Greg Ives with First American Title Insurance Company. You know, title insurance is involved or should be involved on every single real estate transaction that happens. And in my opinion and the opinion of others, it's one of the most important parts of the transaction. Should never buy a property without title insurance. We're going to talk why. We're going to talk about what that means. The word of the week today is a good one. It's binder. Word of the week, binder. I know what a binder is. No, not your binder that you used to hide your homework in or not do your homework in. A binder as it relates to title insurance is a way for you when you buy a property to save money each and every time you go to sell that property within a certain time period if you execute a binder on your title insurance. And you can save hundreds, if not thousands of dollars over the life of your business if you execute and you get a binder policy on your title insurance. And we're going to talk about that in more detail. Again, Greg Ives with First American Title. We're super excited to have him on the show. So let's go ahead and get into it. All right, Greg, it's great to have you here, the one and only Greg Ives. How you doing today?
I'm good, JD. Thanks for having me. I'm super excited to be here.
Good to see you. This is an important topic that I know we talk about a lot, but it's good to bring this information and this content to the people that are listening and watching, because it is one of the most important parts of a transaction, which I don't have to tell you that. But why don't you describe a little bit about your background and history, and sort of in general, what title really is in regards to a transaction.
Sure. Well, thanks for recognizing that title insurance is a very important part of the transaction.
Vital.
Because it does sometimes get lost in the shuffle, and we appreciate
You're welcome.
people that appreciate the value. So
No problem.
My background is I've been in the business for nearly 18 years now, and all here in San Diego. And essentially, title insurance is here to help you identify title issues when you take a listing and when you close a transaction.
Right. So it basically, I remember starting out in Connecticut where we started our business. We relied a lot on the attorneys that closed transactions in Connecticut to make sure that the title was, appropriate, free and clear. But when we moved to California, like many states that don't use attorneys, it sort of falls on now the buyer or the seller to make sure that certain things are, and we'll get into that, like what to look for and things like that. But, one of the things that we always talk about is you really should never buy a property without free and clear title, which is what your company and companies like yours handle. Right?
Yeah, absolutely. That's a huge liability and is definitely not advisable to buy any property without title insurance, because you as a buyer, you want to know what's attached to the property before you own it.
Yeah. So So talk, and we'll dive into the details, but big picture, what does title insurance do when you're buying something? And then obviously, how does that transfer over to the sales side? Talk, big picture title insurance, and then we'll get into some details.
So I kind of like to mimic it to like the DNA of real estate.
Okay.
Basically, we produce a title report that tells you what the ownership is on the property and everything that is recorded against it.
Good and bad.
Good and bad,
Yeah.
yeah. And it's basically like a disclosure document. You want to know if there's restrictions, if there's access,
Easement things,
easement
like that.
issues, if there's money, if there's loans attached to the property,
Yeah.
if the seller has financial issues, child support liens, IRS tax liens, things like that.
So those things will come up on the title report, and then in a normal transaction, right, those things will either get cleared up, removed, handled so that when the new owner buys the property, those things are removed and that new owner now has free and clear title with whatever new liens, a loan, et cetera, that they may have when they're buying the property.
Yeah, that's correct.
In essence, what title insurance
Yes, that's correct.
does.
There are items that will stay with the property forever that never get cleared off.
Yeah.
And that's part of the knowledge of understanding the title report and why you do want to get title insurance.
Good. Well, we'll get into that. What's kind of stepping back, because we have a lot of listeners that are experienced investors, and we have a lot of listeners that are starting out as in the investing field. Why do you think it's so important for a real estate investor to align themselves with, let's say one or a couple of really good title companies or title reps in their local markets that they're investing in?
Sure. So I think number one is that title reps have a huge network. At least that's our job, is to have a huge network in town.
Good point.
And sourcing deals is obviously an important thing for real estate investors.
Absolutely.
And so one of the value propositions I provide is I'm listening to what my clients have in their pocket or what they have listed and making that connection. That's a great deal. I mean, that's a great value for people, especially when there's tight inventory like there is right now.
Bringing opportunities like maybe off-market properties that you hear of through other real estate agents or other people that in the marketplace.
Yeah, exactly. And then, number two is obviously helping you guide the transaction to closing and being educated and understanding what potential pitfalls you might be facing as an investor.
Yeah.
And pointing those things out to you and making sure you are aware of what's on the property.
Okay. Well, I'm going to share from my perspective what I look for in a good title rep. But I mean, why don't you share from your lens, like working with a good investor, what does that look like? What do you look for in a really good client, someone that works well with title to facilitate a smoother transaction?
So, yeah, I mean, not every investor is cut from the same cloth. So
Absolutely.
I think from my perspective, it's super important to be with investors who have a good process, a back-end system. It's repetitive, it's systematized. And frankly, from my perspective, if I have an investor who is fighting to get me on the transaction when they're buying the property, that provides loyalty to me, in turn, I'm going to provide loyalty to them by either showing them the opportunities I hear about, or having that rapport with underwriting internally. There might be transactions where there's additional items that are needed that if we have a good relationship, a longstanding relationship, we are able to navigate through those a little bit better if we just didn't have a relationship with that investor.
Like case in point was a couple of weeks ago, I think I called you on that stormwater easement situation, right? We're trying to sell a home, and we knew this. It has a stormwater easement in front. We actually sold that property yesterday.
Closed yesterday, yep.
Stormwater easement in front, and I knew that, but we didn't. We had it plotted from the title report, but I needed some more details for the potential new buyer. I called you, and I asked how quickly you could potentially get me a better detailed survey. And because we have a relationship, you moved a little faster. I would probably imagine a lot faster than you might have for someone that was calling you out of the blue. But I appreciate that as an investor, right? And that goes to what you just said. You're willing to do that because we do a lot of business together. But it's value for me or for the investor on the other end too. Yeah,
absolutely. I mean, I called in a favor on that one, and that was a bit tricky just based on the location of the easement.
Yeah, it was a big easement too.
And it was pretty large.
It's pretty large.
So fortunately, we were able to, get you what you were looking for, and we got it closed for you yesterday.
Yeah, exactly. Yeah, I mean, from my perspective, and just like I think it's interesting how we met because it goes into what I look for in anyone good to work with. But it's been 13 years now, right? I think we decided that before we started.
Yep.
It's been 13 years, but you walked in. We were newer to San Diego. We'd moved our business back to California from Connecticut, and you were prospecting, calling on potential clients. I don't know this. How did you find out about our company being in town that prompted you to walk into the door and cold call in essence?
So we actually had a deal that you were buying.
Okay.
And
you were doing the title
I was
on
doing
that
the title,
transaction.
yeah. And one of the prospecting activities I do is I always check out the buyers and the buy side, and I noticed that CT Homes was buying a property, and so I dug in and found out where your office was, and It just happened to be in a building where I had a mortgage broker as a client, so I was kind of killing two birds with one stone.
Right on Cass Street, that building.
Cass Street,
was our first office.
Yeah, and so part of my job is just to walk in cold into offices and try to charm people.
And you did. You were persistent because we were working with someone else at that point. And while, I like to meet new contacts, we were happy with who we had, but you were persistent and you earned our business, which is something that I look for. Someone that's persistent can earn our business, but then maintain our business through the quality of the relationship and the work that they do. And you've definitely done that. So as an investor personally, and I think it's good for people to hear when you're looking for someone to work with, even though you already have maybe someone good in this activity or a good rep that you're already working with, someone that is willing to go above and beyond. That's something that we always look for, that I personally always look for, and I think it's good. Someone that is persistent in their, pursuit of you as a customer, is competent in what they do, which you definitely are. Obviously, you were less years in the business then, obviously just because of the timing of it, but you had a lot of experience. You were personable. You communicated other things that you were willing to offer, like what some good title reps do is they'll do prospecting as well for their investor, like getting data, as you know this, getting data so that we can market to, or tracking down addresses or owners if we're door knocking or driving for dollars or sending out mailers. So you offered that service. We got along initially. I mean, I appreciated that we're of similar. I am a little bit older than you, but we're of similar age, and you were at a trajectory in your life, and still are, where you're growing, you're working hard. So that was something that I knew that we could grow over time. So those are the things that attracted me to your services, and ultimately I think have really played into a strong relationship over time. Now, what people will discover here in a second, there's other benefits can be other benefits of this relationship. Like, for example, you've lent on transactions over time into CT Homes, which is a benefit both ways. We were just talking before we started here in the podcast about a larger commercial opportunity that you're participating in as a select group of friends and family. So, it's interesting, and I share that because anytime we work with someone in business, and I would imagine you can share if you feel the same way. You look for other opportunities to help, right, to make money together, to provide value, and those things happen over time. And as an example, next week we're closing on that $28 million apartment building, here in PB that you're participating in.
Yeah, I mean, sitting back and watching you guys operate as a business, you definitely have separated yourselves from pretty much all the other investors in town because you do have a breadth of knowledge, but you're also actively investing yourselves, and you're looking for bigger and greater opportunities, and it's been awesome to be part of that. And from my perspective, it's about trust. Mm-hmm. It's about professionalism. It's about the ability to perform, and
doing what you say.
Yeah, doing what you say.
Yeah. What are some of the? Let's talk a little bit about the title report, because at the end of the day, that's kind of the nuts and bolts of what title insurance handles in terms of what they may need to remove or take care of. And for a lot of our listeners or viewers, they may not have dove into a title report yet, and they can be very daunting. I know they were for me when we started looking at them. What are some of the top 3, 4, maybe 5 things that someone should look at when they're reviewing a title report for the first time? What are the major points to look for that can guide someone when you have a 15, 20, 25 page title report of stuff that, some's important, some things aren't?
Yeah. So my number one piece of advice is don't just rely on your realtor to review the title
That's
report
great
for
advice. Great
you.
advice.
You need to be educated. You
Yeah.
need to understand what's encumbering the property.
Yeah.
So learn the report. The number one most important thing is the vesting and the ownership of the property. Believe it or not, we get into transactions where an agent might think that they have a listing signed by the person who has the authority to sell the home.
Yeah.
And in fact, they don't.
The person who's legally on title is different than the person they sign paperwork with.
Yeah. And I mean, usually that occurs when there is a trust that owns the property and the trustees have passed away. And now that property is in the hands of the successor trustee, which sometimes is a child, sometimes it's independent.
So vesting, and that's typically on page 1.
Page 1, it's
is
like
where the vesting is.
It's like item 2 on First American's preliminary title report.
It says who the county or legally has on record to be able to sign on behalf of the property.
Yeah, and I know it sounds basic, but
it's a good point.
Yeah.
So it's usually a combination or one of either an individual, or there might be a company, or there might be a trust. Are those the three, or are those the three main vestings that you'll see?
Yeah, so individual. So it could be an individual person. It could be a husband and wife. Could be, I'd say that the second most common is a trust.
Okay.
So a trustee of trust. And then third would be some kind of entity like an LLC, corporation, or limited partnership.
So if as an investor, you get the title report, you're in contract to buy the home from, ABC LLC. You basically would want to hopefully see that same name on the vesting on the title insurance or on the title report. And if not, then we need to verify and ask some questions around, does the person we're in contract with to buy the property actually have the ability to sign on behalf?
Yeah, absolutely. And part of what the title company that is engaged on the transaction should be doing is reviewing, in this instance, an operating agreement for the LLC.
Okay.
So
from the seller in this.
Yeah. So one reason why you as a buyer should request your title company is because you know that once you're under contract and you have the title report, your title rep is going to verify the ownership and the correct information.
Yeah. So then we had recently Justin from Alliance in here, right? Which I know you know well because we work together a lot. That's our kind of our A team of group. You on the title, Justin and Josh on the escrow side. So in California and other states, obviously we close with escrow. Some states close with attorneys, as you know, but whoever that third party intermediary is that's handling the transaction, you work closely with them, obviously first to get them the title report, and then working with them to get all the other documents that need to happen, verifying the LLC operating agreement. If there's things that need to be removed, right, you're working either with the attorney or in California, obviously working with escrow, correct?
Yep.
So there's a lot of parts of a transaction, as we know. And so there's a lot of moving parts, but you're basically working with, in our state here of California, escrow to get all those things handled. And then when we start a transaction, you pull a preliminary title report, and that is what we're talking about here to review. Yep. And then throughout the course of the transaction, you're verifying things, correct me if I'm wrong, and then you're getting things cleaned up or removed that, either shouldn't be on there or need to be on there for the new transaction.
Yeah, that's exactly what it's called, a preliminary title report, because we basically will report everything that's open and needs to be addressed or needs to be looked at. So sometimes people will transfer property from their personal name to an LLC, and they'll do it on their own. They'll go down to the county recorder's office and they'll just record the document.
Yeah.
And there's no title company involved on that. We will see that title transfer, and we will go and we will verify that there was no fraud involved, that the person who actually signed that grantee taking their interest off.
By pulling the recorded documents and looking at all that?
We would pull the recorded documents, and then we would require the person who signed their interest off to verify that they actually did do that. Because a title company's job in one of our largest senses is to prevent fraud or to identify fraud.
Got it. Yeah. So you've got the vesting, which we talked about. Yep. What are some other things that you go down the preliminary title report that are really important for an investor to look at when they're buying a property?
So the number 2 would be easements or encumbrances. We call those encumbrances. So
which usually come right after the vesting. Those will be listed, however many there may be?
Yeah, so the title report goes in chronological order of items that were recorded. So the very first thing is going to be the property taxes, because that's the senior item always.
They always get first position.
They always get first position in the property taxes. But then the report will go down the line as far as what has been recorded. So a big thing is called CC&Rs, covenants, conditions, and restrictions.
Yeah.
And that's an important piece for an investor to look at if they are buying a property and maybe they have the intention of going up a second story or adding square footage or adding an ADU.
So define what CC and you just said what it are: covenants, conditions, and restrictions. But big picture, what are CC&Rs, do or say about a property?
Yeah, so they're guidelines and rules that you as an owner have to follow for the neighborhood or the subdivision, or the tract of homes. And I think a lot of people get mistaken that CC&Rs are only applicable to condos. They're not.
It's single-family detached homes as well.
There's plenty of single-family homes that have CC&Rs, and we live in a coastal community.
Yeah.
So obviously views and height restrictions are a big deal.
Yeah, big deal. So
inside of those CC&Rs, they will spell out if there's a specific height restriction or if there's things that you can't do. Certain kind of
material you have to use on the outside because of the community, or certain colors you have to use.
The old purple house syndrome, some places don't want you to paint your house purple. So,
but some CC&Rs are old and outdated and not being followed anymore. This is a good question, because how do you identify, or how does someone identify, besides just them being old and reading them saying there's no way this would be followed? I can give some examples. I'll give some examples now. We've looked at CC&Rs that specifically said that you could have farm animals excluding, I think it was like an elephant or a giraffe. It was literally written into CC&Rs, and this is in the middle of town, which we know isn't going to be followed. Or unfortunately, some of the CC&Rs have been written with the kind of person that can buy the home, or the ethnicity of the person, which of course is wrong. And we don't do that now. But how does someone determine, with those CC&Rs, if they're valid and if they're current and if they're going to need to be followed?
So there's two ways. One, sometimes there's expiration language in there.
Okay.
So a lot of sometimes they just expire after a certain time.
It just says in there they're done after this date.
Yeah. And in that case, we'll just take it out of the report, and that won't be affecting the property. In other scenarios, those things run with the land, and those don't ever go away. However, if they do violate some fair housing rule or some, current federal guideline, then those items are not enforceable. So that's kind of how you got to operate on those. Obviously, the ethnicity, the alcohol consumption, the farm animals, those types of things are not really enforceable anymore. So
is it best to go, because I've done it both ways. Obviously, I've gone to you first and asked you first what your opinion was or thought, or you go up the ladder, if you will, to confirm. And then I've also confirmed with architects too on certain things of what they thought in terms of, building restrictions. What's kind of the order of operations if you're reading the CC&Rs? Maybe half of them you can't even read because it's written so long ago.
Yeah.
Should someone start with you or the title company and say, are these still enforceable?
Yeah, so that's another valuable relationship item. So some title companies are more liberal in removing items than others.
Yeah.
And so there are going to be scenarios where we'll read the document and see that expiration language, and we'll take it out. And you as an investor, you want as few of those exceptions on the title report as possible.
Yeah.
So if you can get that removed from your title company, that's a win for you, because they're basically saying you don't need to worry about these.
So start with you, or your title rep, and then from there you might advise who else that investor should ask, whether it's an architect, et cetera, or the city.
Architects, the municipal code, the zoning code, architects, and then finally the old real estate attorney.
Okay. Yeah, when we've had to do that too. I mean, that's why, and we've talked a little bit about it, it's important to work with a good title rep and also part of a good title company as well. I mean, you're with First American, which is one of the biggest, or is it?
We are
definitely one of the biggest.
We are number one in market share in San Diego County.
Okay.
And we have been for a very long time. We're super proud of that. But we're a national company. But there's other companies
Sure.
that are out there as well.
Yeah, I mean, I'm with you at First American now. You were at other places when I met you, but I mean, I work with you regardless of where you're at. It's good that you're at, obviously a great company now because there are other advantages to that. But I think it's good to note as we're talking and teaching that there's a range in title, not only title reps, but what title companies can and can't do, of course. And so the bigger companies, the First Americans, what are some other ones that you think would kind of fit? Not saying they're better, but would fit into the category of being, very reputable.
Yeah, so
that are national.
Fidelity has like 7 brands.
Yeah.
At least.
Okay.
So Fidelity National Title, but it's Fidelity National Financial Group, and they have a variety of title companies.
Got it.
And then, I mean, those are the big ones. That's really the big ones.
Yeah. And it's not that, those are the only ones to work with or their brands, but I think at the end of the day, they have abilities to do things that are can be beneficial to a real estate investor that maybe smaller mom and pop title companies, aren't able to do.
Yeah. So as you're just talking, I wanted to bring up something that's pretty new, kind of breaking news.
Breaking news.
Yeah.
Right here, everyone.
Right here.
You're hearing it for the first time?
Yeah. Well, this has been a battle now for the couple of weeks with a lot of real estate investors locally.
Okay.
Many investors use hard money or private money financing.
Borrowed money.
Borrowed money.
Yeah.
And a lot of times those lenders are requiring title insurance that's 125% of the coverage, which is above and beyond the actual insured amount.
So normally you just do 100%.
Normally do 100%, but hard money lenders primarily require 125%. That extra 25% is in there, so they potentially would have coverage if they needed to foreclose on the borrower
and spend more money.
And they want the title company to basically cover that.
Yeah.
So over the last 6 months or so, the title companies in industry-wide have really been very, very strict on whether or not they're offering the 125 or not.
Okay.
Many companies have just flat out said no.
Yeah.
I'm not saying that First American is always going to do that, but if we have relationships, and again, it goes back to relationships, if we have relationships with hard money lenders that have a good track record, they don't foreclose on people, and they have certain documentation that we require, like an appraisal.
Okay.
It's amazing to me that lenders are giving loans and they're not getting appraisals.
That's starting to happen again, yeah.
That's one thing that we require.
Yeah.
We're able to issue that coverage for the lender. And that's a benefit for the investor because hard money or private money is
a primary source of financing.
Yes, absolutely. And sometimes lenders are just going to say, well, I'm only going to go with the title company that's going to give me that extra coverage.
So it's good to note, because as I'm listening to you talk, people may not realize that there are obviously standards and guidelines that title companies have to work within, but then there's also certain things that can be discretionary to the title company, like what you're talking about with regards to insuring higher than 100% of the value. And what you're saying, if I'm hearing you right, breaking news, is that First American is doing that if they have an established relationship with the investor and they have good rapport. Is that basically what you're saying?
Yes, and if it's a new customer, really just having their ducks in a row with all of the
having their
items
systems
that we
down,
need.
having everything documented, getting the appraisal and
Yeah.
things like that.
Yeah.
So that's good. That's good to know. Another reason I think to work with a reputable company is also working with someone over and over again, because there's benefits to that.
Yeah.
One of which you just mentioned.
Yep.
Going down the list of things, so we talked about vesting, we talked about anything that may be recorded like CC&Rs and potentially easements. What else should we keep our eyes on when looking at the title report beyond that are really important to note?
So I like to call them, well, they're called money matters, but really the items that can derail a transaction are anything like a lis pendens, filed litigation,
mechanics lien,
liens,
contractor or something along those lines.
Divorce liens.
Okay.
So
money matters. Is that
money matters?
Is that a technical title term, or is that a Greg Ives
That's a Greg
being
Ives
in the
term.
business?
Yeah.
I'm gonna write that down. I like that. But you're right. Those are the ones that are typically can derail a transaction, but usually are harder to solve.
And sometimes they can be a surprise.
And sometimes they can be a surprise. Give me an example of a recent money matter that you like, wow, I've never seen that before, or wow, that was crazy.
So we had a deal probably 4 months ago where the seller had been in an active divorce since 1996.
Since 1996.
He was in a divorce since 1996.
And it hadn't been finalized, and that, I mean,
No.
Oh my gosh.
No, and there were multiple recorded attorney liens and like divorce liens. They were called performance liens that were recorded on the property that were tied to the ex-wife. And it was this massive negotiation.
What
obviously.
was the total of those money matters liens that were recorded on the property? Just ballpark.
Regarding those items, it was over $2 million.
Over $2 million. And do you remember the purchase price of the home?
I think it was around 3 or 3.5.
Okay, million.
Yeah.
So there's a lot of money that was recorded that needed to be negotiated in these money matters.
Yeah, and obviously being that it was pending since 96, it wasn't an easy feat, but we actually got it done, surprisingly. But
so who steps in? This is good for everyone to hear. When money matters come up, those kinds of things, and those are common. I mean, maybe not that much, but common ones like
sure.
things in terms of litigation around a divorce or mechanics liens or things that pop up that maybe the seller or the buyer didn't know about. Who takes the lead on negotiating those? I know when we started in Connecticut, normally the attorneys would be there to kind of take the lead, but a lot of states don't close with attorneys. So where does someone go to get that process started?
Yeah, so escrow is actually the one that reaches out to the lien holders and requests what's called a payoff demand.
Okay.
So if they see a child support lien that's on there, the escrow's responsibility is to contact the county where the lien is filed, get a demand for payment from them, and there will be a number that's attached with that.
Contact that individual, that entity, and get that payoff.
Yeah. In the instance I was just talking about, escrow reached out to the attorneys, and they had a file very, very thick about what was
big
owed.
file. What was that? What did that even get negotiated down to? From the
No, I mean that was
the number. That's what had
there
to
was
get
like
paid
$2.5 million that was paid off at the end.
And the buyer, did the buyer know that there was that much involved, or was it a retail transaction, or was it an investor transaction?
No, it was an investor deal.
Did he or she know that there was that much that needed to be negotiated on title?
From the buyer's perspective, honestly, they didn't care as long as the deal closed. It was coming out of the seller's side, and all they were worried about was closing.
Yeah. So another good reason to work with a good title company and have a good team, escrow, title, attorney. I know from personal experience that sometimes the buyer will step in too to help facilitate that information faster too. Because, as an investor, if I'm buying a property or we're buying a property and there's other things that pop up, and you want to close that transaction, yes, at the end of the day, as long as it gets resolved, you don't care. But if you want the transaction to actually go through, sometimes you got to step in and make it happen, either by getting to the seller or their contractor that attached the lien to the property, and sometimes step in.
Yeah.
But like you said, normally escrow or the attorney will reach out to the individuals and get that payoff. But then sometimes that payoff isn't, maybe there's some discrepancies on if that is accurate or not. And then that's where other things have to pop up. So there's a lot that goes into title and clearing things on title, getting title insurance. I mean, sometimes there's very few things on title, but as you know, that isn't always the case.
Well, fortunately, we're in a market where there's a lot of equity out there.
Yeah.
And so in that scenario that we just discussed, I mean, if this was a different time, either the ex-wife has to take a haircut on what she's getting, or the deal just doesn't go through, and the seller's stuck with a dilapidated home that he can't do anything with.
Yeah, I can make or break a transaction.
Yeah, it can absolutely.
We're in a transaction right now. We didn't select title when we were buying it because the seller did, so you weren't involved on that one. But literally the day or two after we closed, someone, I'll just leave information out of the names, but they recorded a lis pendens on the property that we now own the property. This individual claiming that they have rights to the property, which we weren't weren't given that information or disclosed that information. We knew that there was difficulties with someone that was living in the home. We didn't know that they had or claims to rights to the property, which we don't believe they do. But this happened after the closing. We already own the property with free and clear title. So when that happens now, then there's a host of things. Someone buys the property, something comes up after, or someone raises their hand after title insurance has been issued and says, hey, wait a second, I have rights to this property. Then there's a series of things that can happen as well, like the title company's insurance or attorney gets involved, which is what is happening on this transaction.
I'm just going to thank you for not getting me on this
transaction. Welcome. You're welcome, because while I love talking to you, you and I would be talking a lot more right now. And, First American's attorney, one of their attorneys we'd be working with right now. Yeah. But it happens. So
That's why you need the title insurance.
That's why you need title insurance, because, and I'll say it again, we should never buy a property without title insurance. Or a very, very clear, detailed understanding of why we don't have insurance and a clear path to getting that resolved, although I still wouldn't recommend that. So in that scenario, what I'm talking about now, or in general in that scenario, you buy a property, has title insurance, and then after all the transactions done, you've got title insurance on your property. Someone or something pops up that claims that that isn't the case, that they have a right to the property. What should someone do, in general? What's the process that gets started to try to get that resolved?
So it is filing a claim with the title company, and it's
what we did.
It's as simple or painful as filling out a form explaining what's happening, all the details of the transaction, what the claim is. And then unfortunately, it does go into the claims department that is full of attorneys, and they're going to dig in to the transaction. They're going to interview everybody that is involved
Get
or
to
was
speed
involved.
on what's going on, read any documents that have been recorded, talk to any attorneys.
Well, they're going to talk to they're going to talk to the agents. Yeah. They're going to talk to the principals. They're going to find out who knew what. And, you as the insured, you're the client of the title company. And so their duty is to defend the title and defend your ownership. And
ultimately, if it's determined that it's something that falls on the title insurance company's shoulders, then there'll be a payment or some sort of resolution financially that the title insurance company would be responsible for.
Yeah, a title claim can sort out all kinds of different ways. Worst case scenario for the title company is that they have to give the property back to the
unwind the transaction,
pay back the investor or the owner.
Yeah. Which
is a pain
in the butt.
Yeah. And nobody wants to go down that road, I'm sure. So
best case scenario is that they determine that it's erroneous and then there's nothing to be done. Yeah. But there's usually probably some, correct me if I'm wrong, middle ground where there's some validity to it. There's some sort of mediation or discussion, and then some amount of resolution, financial payment is made to the person that's claiming something.
Yep.
Absolutely. Which is again another very important reason why as an investor or someone that buys a property, we get title insurance, because you have another set of resources at your disposal if something pops up that you are unaware of. So, anything else on a title report that we should be wary of or look at? I mean, we've covered some big ones, right? The vesting, obviously, any recorded encumbrances or easements, and then, as you call them, money matters. Beyond that, is there anything else that we should focus on? I mean, I guess the map or any plotted easement map that comes with it.
Yeah. So on the easement note, many times they are available with legal descriptions, so you can get a map that actually will draw out the locations of the easement.
Okay.
That is very important to understand. So the deal we were talking about, where the storm drain was kind of going through
front half of the property.
That's an important thing to know and just be aware of it if you're buying the property. So most of the time, the easements are along the sides of the lot lines. They're not big issues, but you do want to be aware of that. And getting the plotted easement map is very important.
So I would just put it on everyone's list that's watching or listening right now. When you get a title report, I would suggest you also ask at the same time for a plotted easement map, because correct me if I'm wrong, it isn't a common thing that the title company will produce unless it's asked for. Am I right in that statement?
Some companies produce them automatically, like First American,
and some don't.
Some you have to specifically ask for.
Yeah. You know, Greg, before we get into the next question, I wanted to share with everyone about a couple of our upcoming classes. We've got some really great training coming up, taught by our top trainers within the company. Whether you're new, experienced, starting your business, growing your business, you can, if you're watching, you can click on the links below this show, whether you're watching on YouTube or Facebook or the other channels. If you're listening, go to FortuneBuildersShow.com to get more information. Not only do we love investing, but we love teaching investing almost, if not more, than we love actually investing. And within those classes, you'll learn a lot more, not just about title insurance like we're talking about on this show, but about sourcing deals, about funding deals, about repositioning transactions, commercial education. And so again, click on the links below the video you're watching. If you're listening, it's FortuneBuildersShow.com to get more information about those classes. All right, Greg, let's get back into it. One thing I learned about, I'll say recently, but more along the line, more specifically when we moved back to California with our business, is something called a binder. So talk about what a binder on an insurance policy does, how it helps, what it saves, what it doesn't save, really what it does.
So I'd say that the binder is the single most valuable title item that an investor can ask for in a transaction, because it's a huge money saver for the investor.
Good.
Basically, what a binder is, it's a promise to insure the property in the future. And so when you're closing on a transaction and you're requesting a binder, you're basically telling the title company, I will pay for future insurance. So
I'll pay you a little bit more now, basically, when I buy the home, but I'm saying, hey, Greg, I'm going to guarantee I'm going to go use you when we go to sell the home in 4 months, 5 months, and et cetera.
Yeah,
Is that right? Basically,
yes,
right?
Yeah, so a typical binder is good for 2 years.
2 years. Good
and
to know.
then it can be extended for a third year for an extra 10% of the price.
That's also good to know for everyone to pay attention, because I've called Greg, maybe it was right after or right before the 2-year mark, needing to extend, and we made it happen. But you're right. Is every binder the same in terms of it's usually a 2-year window of when that binder is available to you? Yeah,
it's industry standard that is 2 years,
Okay.
And then you have a third-year extension.
All right. And then if that's good to note, obviously ask if it's a 2-year, if there's some difference of that. And then if you plan on owning the property, beyond that, make sure you extend it. Talk about an average is what can be saved when you get a binder policy, because it can be a little confusing to hear, well, we pay more up front, but we save money when we go to sell it. That doesn't seem to make sense, but kind of explain how that works.
Yeah, so the math is slightly confusing, but what you need to know as a buyer is that the upfront cost is 10% of the seller fee. Okay. So usually the seller's fee is quite a bit more expensive than the buyer's. So in an example, if the seller's fee is $2,000, and you want a binder, you as a buyer is going to pay $200.
$200.
Okay. Now, let's say that $2,000 fee is for $500,000 value on a home, and you buy the property, you increase the value, and you increase it to $750,000
through renovations.
Adding square footage, all that stuff. Let's go now put the property on the market at $750,000. Let's say that the title fee normally would be $3,000
because of the new value.
Because of the new value, right? If you didn't have a binder, the seller would be paying $3,000. Since you have a binder, you're only going to be paying the difference between the $2,000 and the $3,000. So you're going to be paying $1,000 plus the $200 that you paid when you acquired the property. So your total fee is about $1,200 versus $3,000 in that example.
Yeah. So that's a significant savings. And I realized over the years that a lot of people don't know that that's an option or available to them. And a lot of our listeners or viewers are in the quick turn, real estate game, buy, fix, and sell. So you can save significant amount of money over the course of, months or a year or the life of your business by doing that.
Yeah, absolutely.
So is there anything different that an investor needs to do to get a binder beyond asking their title insurance company or their rep that we want a binder?
No, you just need to request it. The other thing that you need to keep in mind is that the binder is actually not a policy. So
That's a good point.
So technically, you do not have a title policy that is enacted while you own the property.
Okay.
But should there be a claim on the title, like we just discussed, you have the option to convert the binder to a policy. So it's not like you're not going to be covered. It's just that the title company has not issued the policy because they expect you to bring it back to them in a few months. If you do get that issue, then you can convert it, and then you do have coverage.
That's a very good point. I'll restate because I did not know that the first time that we started investing in binders. So technically, when you get a binder, the title insurance policy is not activated because of what you said. It means that we're going to come back to you to execute that policy once we go to sell it. But it does not mean that you as an investor, when you get a binder, don't have coverage, because what would happen is that the policy would get activated. You'd convert it from a binder to a regular policy. So you'd basically pay that money, I guess, at that time when you converted it.
There's no conversion fee.
Okay.
It's literally you do get issued a binder. It's like
certificate.
Basically. Yeah. So the process is you have to send back the certificate to the title company and then write a formal letter saying, I'd like to convert title binder number blah 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 into a policy.
Okay.
Usually you're doing that because you're about to file a claim, and so then you go through the claims process.
So you're not in jeopardy of having something come up that you're not going to be covered for, because you can just execute the binder or convert it to a policy. As an example, the scenario I told you that popped up after, we have a binder on that transaction that we had something pop up after we closed. We converted the binder to the policy, and then everything took place and started in terms of their discovery and getting information and making sure we're covered. So the important thing is, when you get a binder, doesn't mean that you're not covered properly for items that could come up. It just means that you have to convert the binder to a regular policy if something comes up and you have to move forward with the policy. Is that correct?
Yep.
So is there any liability from an investor standpoint at all of getting a binder and doing it that way?
No liability, but you do need to keep the title the same. So don't close on the transaction in your personal name, and then move it into an LLC or limited partnership or something like that. The vesting has to remain the same. So you could potentially void your binder and your policy if you change title post-closing.
Okay, that's good to know. All right, so good information. I do agree with Greg, and we're going to be wrapping up here in a little bit. I got a couple more things to ask, but the binder, not only will it save you a lot of money, but I do think it's one of the most important things that you can execute on your transactions for a variety of reasons. I think primarily it does save you money. You have the same, basically the same coverage, but over the course, we'll do over 100 transactions this year. I haven't done the exact math, but obviously that will save. In the example that you described, that was $1,800?
It was $1,800.
$1,800 savings. I mean, you can do math on that. That adds up pretty quick. Okay, cool. So we talked about binders. Are there any other? Why don't we just quickly, as we're getting ready to wrap up, and again, thanks for being on. We've covered a lot of great information. What are some of the most? We talked about the common things to look at on the title report. What are some of the, I guess, the most regular, the 2 or 3 regular things that you've seen come up in terms that we have to deal with on the title side, either getting removed or handled, like just common things that typically have to get taken care of on any transaction with regards to title?
Lately, it's been what we call these uninsured transfers. So properties held for a long time amongst family members, and
they move it between.
They decide to
add someone.
They decide to add somebody to the title, or they take somebody off, or they move it into the trust, and then the trustee changes title again.
Yeah.
There's a chain of events that we have to go through and verify. So I mentioned it earlier.
Yeah.
Fraud is a big
part of what
issue.
you're trying to make sure isn't happening.
Yeah, exactly. So we've had issues where maybe we can't track down the person who signed off on the deed, or we have a trust that has gone missing.
Yeah,
like an old trust.
No one can produce a document.
Yeah, so that's been happening quite a bit, actually.
Is there anything an investor can do on their end when they're buying a property to try to prevent that, avoid that, or get ahead of that situation? I'm thinking through, there isn't really, right?
No, not from the buyer side.
Yeah.
You're just going to have to
Another
be
reason to work
patient.
with a good title company and a good title, rep.
Yeah, absolutely. If you have somebody on your team that you know is going to be able to navigate it, or it comes back to, being, not inside the box necessarily, and having logic or solutions to get around
being
it.
creative and within the guidelines and
Yes.
the ethical, legal requirements that are available to us.
For sure.
Yeah.
And so I'll just share as far as what we do with trusts.
Okay.
So lots of times the property might have a trust from the 1980s. It was parents' trust, and the parents passed away, and now the kid's been sitting on the property for 20 years, and they want to sell the home, and we go back to them and say, okay, we need you to produce the parents' trust from 1988. And they say, well, sorry,
I have no idea where that's at.
No idea where it's at.
Yeah.
In certain scenarios, we will consult with their estate planning attorney. So,
Oh, wow.
so hopefully the family has an attorney that's representing the estate in the sale of that property, and in certain scenarios, we'll get it from the attorney that says, okay, we've verified that, he's an only child. His parents were leaving the property to him via a will. I'm administrating the trust, and I've confirmed this is a legit seller, and he's entitled to.
And you're okay
100%.
issuing the title insurance policy.
Yeah.
The interesting thing as we're getting ready to wrap up is that there is some subjectivity, I guess, if you will, in regards to what the title company does. Not meaning that they work in gray areas by any means, but you're looking at the information that is either obtained in writing or that you obtain from the parties and making certain decisions on if it's valid or not,
Yep.
getting the attorneys involved. So, from my perspective and for those people listening, I think there's a tremendous value in working not only with a good title rep, but a reputable company like, the First Americans and the Fidelities of the world. We covered a lot of information, Greg. I think we could even figure out if you're okay with it, get you back on subsequent shows to dive into some of these things deeper, maybe even pull up an actual title report,
Sure.
kind of look at it. Because, it's one thing to talk about. It's another thing to see it. Are you open for that?
Yeah, absolutely. I love reviewing title reports. I do it every single day.
Well, I appreciate you being on the podcast, and as importantly, I appreciate the work that we do together.
Yeah.
It's been fun to get to know you over the years, really become friends. Correct me if I'm wrong, do you owe me lunch on any recent bets, or do we settle all those up?
No, all football bets are off right now because the Seahawks are not playing well. Unfortunately, we haven't played the Raiders.
Tough season for you guys.
We haven't played the Raiders, so.
Us too. But thanks for being on. Thanks for dropping a ton of knowledge. I would like to get you on, maybe dissect an actual title report and talk about some more information. So thanks for being here, Greg, and have a great New Year.
Thanks, JD.
You're
Thanks
welcome.
for having me.
I want to thank everyone for tuning in, whether you're watching the show or whether you're listening to the show, driving in your car. We appreciate you tuning in. If you know someone else that can benefit from the content and what we share on this show, please share, subscribe, like what we're doing here at the Fortune Builders Investing Podcast. If you want to get more information about the training I talked about, you can click on the links below the video wherever you're watching it. If you're driving and you want to go to FortuneBuildersShow.com to get more information about that training. We're on a mission here at Fortune Builders to empower your purpose through financial education, and we take that very seriously. Thanks again, everyone, for tuning in. We'll see you on the next show.